I'm Peter Walton from Zenith Group, and I'm talking to you today about changes we've made to our portfolios this week. So what have we learned in the last 2 or 3 weeks? A number of things. Firstly, the chance of Donald Trump upsetting the results of the recent US election are now quite remote, and those results look like they'll be locked in. So that's a risk that's less than what it was. We also know that a successful vaccine against the pandemic is imminent, and in fact the UK is going to start rolling it out next week, and in Australia early in the new year. So although the death toll and the infection rate from the pandemic is at all-time highs, the outlook, strangely enough, is improving. The other thing we know, particularly in the US, is that there is another proposed round of government assistance, massive government assistance, which share markets always like. In Australia too, we've also had unprecedented levels of government assistance, which has caused an unusual thing to happen for a recession. Normally household savings decline in a recession, but recent measurements have indicated that household savings have actually increased over the last few months as a result of the government assistance we've been able to receive. So what we've done, we have returned the portfolios to what we call our normal weightings. So if you are I call it a growth investor, the benchmark in that category is about 80% in growth assets and about 20% in more defensive assets. If you're classified as a balanced or growth and income type investor, the target weightings are about 60% growth assets and 40% in defensive assets. And if you are more of a conservative type investor, then the weightings are about 40% in growth assets and 60% in defensive assets. So at no point do we have actually all monies invested in the share markets, etc. It's always weighted depending on people's risk profiles. But we've now returned those settings to what we call more normal. And one of the things I suppose we've also been able to recognise is just the trend. And you can see the US chart next to me here, which is the US share market for the last 12 months. And following a massive decline in February and March, there has been a steady increase since. So there's an old saying, the trend is your friend, and we watch that and we do take notice of it, even though some of the economic indicators are not that certain. We continue to watch and observe with interest and analyse matters as best as we can. And if there is a change in circumstances, we're quite happy to make further changes. But right now, we're sitting on what we would call our normal weightings. As usual, you're welcome to have a look at your portfolio online. You're welcome to call us if need be. And we hope to be in touch again with you soon. If for some reason don't speak to you before Christmas, have a wonderful Christmas in this strange year that we're now completing, and we hope next year is much happier for all of us. Thank you and goodbye.